Hi, I'm DKWILL. This is DKWILL Talk About It. We got a lot to cover in this video. For instance, Ripple Treasury on a tear. Will $13 trillion of annual activity improve XRP's recovery? Recovery from what? Well, right now, XRP is trading at $1.30, a downward trend. Will that ever turn around? Well, how about things that develop like this? Ripple Treasury finally joins the SWIFT program after years of doubt. Now, I'll put cards in this video of the videos I've done in the past that's covered these specific items in anticipation of covering them again in the future. And here we are. Make sure you keep your eyes out for the upper right hand corner. Make sure you like, make sure you subscribe, make sure you comment, because we're also going to talk about how the price prediction of XRP as the Clarity Act's new stablecoin rules favor RLUSD over USDC. And if you recall, we did a video on RLUSD where it has been authorized to be able to mint 10 quadrillion coins. If that's not going after all the money, I don't know what is. And then we'll talk a little bit about David Schwartz's opinion that when crypto beats stable coins, and so not just one stable coin over another, how about crypto over the US dollar for locked funds? All very interesting, and we're going to talk about them all and try to squeeze them in. So we got to get started.
Check the mic and make sure it sound right.
And I hope the mic does sound right. Yes, the Ripple Treasury is on a tear. Now, we did a video about the Ripple Treasury in the past, and it was entitled Ripple plus G Treasury, Building the Future of Finance. That's the thumbnail, and the card will be up in the upper right-hand corner right about now. Yes, this article from April 3rd, today is April 5th, talks about the news today after it unveiled the first Treasury management system, which supports native digital assets in a bid to make institutional adoption seamless. On Wednesday, Ripple said that the new TMS will feature digital asset accounts in a unified treasury. Notably, firms can send and receive XRP and Ripple's stablecoin RLUSD through the digital assets accounts. Fiat and crypto assets can be viewed and managed through the unified treasury feature and will run on top of Ripple's G Treasury. I encourage you to go check out the video if you want to know more, because Ripple's acquisition of G Treasury last October was for $1 billion for a popular platform which most Fortune 500 companies use for traditional cash management across the globe. Can you say all the money as Ripple eyes global payment integration? Because, see, Ripple isn't stopping at treasury management. And if you like the content I'm providing, please make sure to like, subscribe, and ring the bell for notifications, and then come back for more DK Will Talk About It. No, according to the senior VP of Ripple Treasury, the firm plans to integrate its global payment network with Ripple Treasury to allow corporations to also earn yield on their idle balances. He went on to say, from the moment G Treasury became at Ripple Treasury, we've been building to this, giving corporates a clear, trusted entry point into digital assets. Now, keep in mind, earlier we talked about institutional adoption. That's hedge funds, that's retirement funds, that's municipal funds, that's government funds, that's big money. And with the addition of digital asset management accounts and unified treasury, Ripple Treasury gives the office of the CFO, the chief financial officer of a company's treasury, a trusted single place, one place to hold and manage both digital and fiat assets. That is huge. Next up, connecting to Ripple's regulated payments network and prime brokerage that allow corporates to use digital assets and stablecoins to orchestrate cross-border intercompany payments 24/7 while earning a yield on their idle cash and so much more. We can see why with the Stablecoin Act they're fighting on how much the companies are paying on stablecoins yield. Commenting on the update, CEO Brad Garlinghouse called the integrated treasury the secret sauce to reducing friction to institutional adoption. Bullish on the move, he posed. Yes, I'm bullish on the move too. That is a big deal. And then last year, Ripple acquired Hidden Road and formed its own brokerage arm. In other words, Ripple is slowly positioning itself as the entry point for institutional players into the space. So not only are they owning the room for treasuries, they're also owning the doorway to get into that room through Hidden Road. And back in October of last year, I did a video on Ripple Prime, the hidden road to all the money. This is the thumbnail, and the card will appear up in the right-hand corner right about now. But while we're on the topic of Ripple Treasury, the Ripple Treasury also finally joins the SWIFT program after years of doubt. There was no doubt, and I've done videos about the integration into SWIFT. As a matter of fact, the confirmation that it was done, I'll put the card up in the right hand corner, but this is also an April 3rd article, and it shows that Ripple's Treasury had joined SWIFT, enabling direct global bank access, unified fiat, and crypto control. Now, speaking of banks, we can see with all these developments with Ripple and the ability to pay yield on funds, quite institutional money, we can see why the banks are so worried about a bank exit, because where does the money go for these institutions? Well, it goes in the banks. If you look at any kind of traveler's check or anything like that, you'll see there's a bank listed on there. Even your credit cards, there's going to be a bank listed on there that's sponsoring or underwriting that credit card. And so that's why the banks are so worried about these exchanges being able to pay yield. They don't want to be cut out of the picture. And all the exchanges are holding all the money and all the stable coins and paying all the yield. So they have to get that yield under control so that they're not losing their profits. That's really what they're protecting. They're not worried about the protocol improvement as much as they're worried about protecting their profits, because they don't care if they make $1 trillion off of us in 3 seconds or if they make $1 trillion off of us in 3 days, as long as they make that $1 trillion. But this dual payment system allows firms to use SWIFT to settle instantly with XRP and RLUSD specifically. Can you see how Ripple is even more so cornering the financial market? And the OCC rule now active supports Ripple's push into banking and broader financial integration. We know that Ripple has already been designated also a banking license. But Ripple has joined the SWIFT Certified Partner Program. And in my prior videos, I talked about Garlinghouse's confirmation that they're going to acquire about 14% or so of Ripple's volume. It's probably going to grow more beyond that, but 14% is probably going to come pretty rapidly. And that's going to add up to like 150, what is it, 15 trillion, $1.5 trillion or so moving through the Ripple network. That's not counting what we've already talked about with the institutions as well, right? So we see a whole lot of developments with XRP as Ripple Treasury expands their Swift connectivity and tools, and now they support direct access to Swift's Alliance Lite 2, along with integrated communication channels such as the acronyms you see there. And the system includes Swift RE integration, enabling accurate IBAN and ABA lookups for cross-border transactions. You know how you do your ABA routing number for your bank, your international banking numbers as well, folks? Ripple is grabbing all the money. And it says, consequently, treasury teams of various companies will be able to engage with international banks in both traditional and digital models. The platform centralizes treasury operations with liquidity payments and account management available in a single dashboard. So, what we talked about earlier is also incorporating Ripple into the Swift various channels and systems as well. As I said, and I will say it again, this is huge. For the sake of time, we're not going to be able to cover this entire article. I want to touch on each article that I mentioned in the introduction. But I do want to mention that Ripple has moved closer to a deeper role within the U.S. financial system following the April 1st implementation of the Office of the Comptroller of the Currency, the OCC, final rule. The update allows trust banks to expand into non fiduciary activities, opening broader access to the banking system. That fits Ripple's acquisition of that status. And separately, Ripple Prime received a BBB issuer rating from the KBRA. The agency cited a strong capital position, including approximately $5 billion in cash and $40 billion in XRP holdings. And let's not forget, I also mentioned they said they own $70 billion in crypto. So there's another 30 billion that they're not even referencing here, but by those two alone, Ripple has positioned itself not just to have a deeper role within the US financial system, it's positioned itself to have a major role, deeper role, primary role in the global financial system. Ripple provides back-end liquidity, on and off ramps, and blockchain-based settlement capabilities, not just within the United States, but for the entire global system. And in fact, while the SEC case was going on, they were building their business overseas. It was just an opportunity. It was just a movie. It was just a distraction for the United States to set up a monetary system and not lose dollar dominance. We'll talk a little bit about that going forward. But first, let's move on to talk about the XRP price prediction as the Clarity Act's new stablecoin rules favor RLUSD. Isn't that interesting? Over the USDC. Yes, this article here is also an April 4th article, and it touches on some of the things that we've been talking about in regards to the banks and their impact on paying yield. As the Clarity Act's new stablecoin rules favor RLUSD over USDC. Now, we've seen how RLUSD is gaining a foothold through Ripple's movements and action, but nonetheless, what's really drew my attention here without getting into all the technical analysis and everything that's on there, because that's not really what we do here. But what it does bring out here is the Clarity Act's favor RLUSD over USD. And the latest draft proposes banning yield on passive stablecoin holdings. Now, think about that. Why would they ban yields on passive stablecoin holdings when we just read about the Treasury and the things that Ripple is setting up where they will pay yields on the funds that they hold for institutions? That doesn't sound very fair now, does it? So who are they referring to when they say they're going to ban yield on passive stablecoin holdings? Because we just read that that's not going to be the case in Ripple Treasury. It says it would prevent platforms from offering rewards simply for holding stablecoins. To me, it sounds like an effort to kill the cryptocurrency business model and use cryptocurrency business models only for the operational aspects of handling the technicalities of moving crypto through the blockchain, whereas preventing them from acting like their banks. Now, the banks apparently hold way too much power in these modern days of ours. It says it proposes effectively closes the model that allowed Coinbase to offer roughly 4%. Again, covered in my prior videos. It says the application by Ripple to obtain an OCC bank charter can also be a regulatory benefit. And that's where Ripple will be able to pay because they'll be a bank. Whereas Coinbase, if they don't get a banking license, Uphold, if they don't get a banking license, Kraken, if they don't get a banking license, I don't know if they do have one or not, but all those other exchanges, if they don't get a banking license, in other words, get forced into the mold of the old legacy system, they won't be able to pay a yield. That just doesn't sound right to me. With the yield ban in place, utility-based stablecoins rather than reward-based stablecoins may be on the rise as a result of the Clarity Act. Exactly what I just said. They will just be utilities and they will not be a way for us to earn passive income on our money. Your money for passive income will go to the banks, and as this article noted, I'll find it here, right here. Traditional banks, by comparison, offer minimal interest on deposits. So, what about the price? We know that the price right now is $1.29. It's gone down a penny since we started this recording of this video. But in the case of bulls regaining ground at the level of $1.38, the next resistance that will be targeted by XRP is $1.45. The break above $1.45 could lead to a break into the $1.50 area. But the inability to keep at 130, which it just showed, we don't know if it's going to close there or not, might lead to a further fall to $1.25 and even below that. Remember, I did mention the young man that told me that he saw 60 coming, 60 cents, that is. That would be the biggest and last opportunity you will ever see to get your hands on XRP at a bottom basement rate. And I encourage you to do so. That thought takes us here. When crypto beats stablecoins, well, if stablecoins can't pay you anything, like I've said in my prior videos, they're a losing proposition for us because it costs you fees to get them, and then you can't earn money on them. So David Schwartz says he'd pick XRP or Bitcoin over USD for lock funds. So now we're talking about USD, but where do you keep your USD? And the banks don't pay. Cryptocurrencies like XRP and Bitcoin offer advantages in global use control and long-term growth. David Schwartz highlights key differences shaping their role against stablecoins. So he's getting on my bandwagon. He warns issuers can freeze funds, exposing users to centralized control risk. He says stablecoins tied to fiat limit global utility across borders and multi-currency systems. His views on stablecoins and cryptos. He outlined 3 specific advantages cryptocurrencies hold over stablecoins, and I'm just going to have to agree with him because the Clarity Act is addressing earning yield on stablecoins, but that doesn't, in fact, I imagine the impact you can earn yield on other coins that are not stablecoins, rewards as they're called. His remarks focus on cross-border limitations, issuer control risk, and long-term value potential in digital assets. He said there are some cases where volatility is a huge problem, and so a stablecoin is a better choice than a cryptocurrency. Similarly, there are cases where a regulated asset with a trusted counterparty is a benefit. He emphasized that centralized entities must comply with court orders, which may override user interests. And that's where I said it's going in my prior video. They're going to be able to say, I'm sorry, we can't pay you the big interest we were paying you before because it's law, it's codified, it's illegal, and so we can't do it. And the banks are forcing this as well. The banks are fighting the implementation of the cryptocurrency system until they can get it better under control. That's really what's going on. They know they're not going to stop it. And Ripple knows they're not going to stop it. And that's why Ripple's on a tear and they're setting up that monetary system with that $13 trillion worth of annual activity that's only going to improve. Ripple is also going to join Swift and they are going to keep moving forward and get their hands on the entire monetary system. That's just the way it's going to be. They will have all the money. And when that Clarity Act comes out and stable coins aren't paying anymore, you better be in the good cryptos because the bad cryptos are going to die. But the good cryptos might very well be paying you staking rewards because that's not the same thing with a stable coin, is it? So we're stuck in the same place. Where are you going to put your money? One safe bet for your money, whether it drops to 60 cents or jumps to $6, is XRP. And I don't think it's going to be all this resistance talk. I think it's going to be overnight. And when it happens overnight, you won't care if you spend $1.30. You won't care if you spent 60 cents. You won't even care if you spent $3.50. What you'll care about is you're one of the rare people who actually own XRP and you're there when it happens because you had a gorilla grip and maybe because you listened to DKWILL talk about it.
Check the mic and make sure it sound right.